Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York. It is August 1st, 2019, and this is the Daily Report for Gold and Silver. To say that the financial markets have been in a defined roller coaster ride over the last 48 hours would absolutely be an understatement. Beginning with the Fed announcement yesterday, where they cut their key Fed funds rate by 0.25%, taking U.S. equities and gold dramatically lower, and then followed by a series of tweets today in which President Trump announced that beginning September 1st, he would initiate a 10% tariff on the remaining $300 billion worth of Chinese imports, which could in fact be ratcheted up to 25%. That put a spin in the market in which we saw gold rise tremendously, up about 1.3%, and the equities markets continuing to fall for a second day in a row. That being said, I do want to voice my disappointment, and I want to offer my apology for this last trade in which we got stopped out roughly $1 from the intraday low achieved this morning. That being said, I do expect gold to continue to rise. This kind of an announcement is not a one and done in terms of the effect in the market, and it's a matter of positioning ourselves. I still am looking at a target above this at around 1480, but I am revising that at this point to just below 1500 because of these new fundamental factors that have entered the market. That being said, let's take a look at the current price board. Gold had a tremendous range today, trading to a low of 1412.10 and a high of 1458.20, currently trading at 1456.80. That's putting it up about $19 on the day. The rest of the precious metals complex did close lower, with silver losing about 0.4%. That's about 7 cents at 1633.5 cents. We had platinum down about 2.5%, a net decline of $23, with platinum currently fixed at $855.80. But the incredible move down today was palladium, losing $97, currently at $1427.30, and that puts it below the price of gold for the first time in quite a while. Traders, let's take a look at our technical studies. Without question, the fundamental events that occurred over the last 48 hours have had a tremendous effect on gold pricing, taking that market dramatically lower yesterday and then dramatically higher today. There was some disappointment with the Fed announcement, not so much on the 0.25% rate cut that was announced, because that was highly anticipated, although some had hoped for a 0.5% rate cut. It was the fact that during the press conference, Chairman Powell expressed that he didn't see this series of rate cuts as a long and extended move. He didn't go as far as saying it was a one and done. He really put the cap on any kind of bullish market sentiment, which grew out of the rate cut because of that statement. Today, we saw a series of Trump tweets sending the market into a tailspin when it comes to U.S. equities, and a tremendous spike to the upside in gold. Here's the thing. When we look at this market now, the fact that it closed above what I believe was a really major level of resistance, and that was 1442.50, that level comes in from these series of tops here. Although we had an occasion a couple of weeks ago where it traded above that, it closed below it. And then on this large red candle, it opened above this price point and then closed dramatically lower. Yesterday, we closed below it also, even though it opened just above it. Today, this is significant in that not only have we seen gold move up about $19, but effectively closing above this price point, first of all. The second thing that we can easily see is a two-day candlestick pattern, simply called an engulfing bullish. Typically, you look for an engulfing bullish after a defined downtrend, but nonetheless, the pattern itself is clear in that this large green candle has fully engulfed not only the entire body, but almost the entire trading range of yesterday's activity. If we do get follow through tomorrow, it could signal a re-entry into the market, and that would really be defined if we had a green candle that was fairly large in size with a higher high as well as a higher low. It would look something like this. That being said, we should have this former level of resistance now become support. So if we are going to make a move in the market, we can do so with less risk than recent risk. And as I said, my first target continues to be around $1,480 per ounce. The other tremendous move we saw today in the precious metals complex was in palladium to the other side. A tremendous sell-off, losing almost $100, currently down $98.80 at $1425.60. It is now below the price of gold for the first time in quite some time. Was there major chart damage? Well, absolutely. It broke through the 50 as well as a 100-day moving average. In fact, that is pretty much where palladium prices closed at $1425.60. There could be some real support that comes in at the 0.23% retracement level, and that is $1403. This move is significant. Now, we have seen a couple of occasions when the market has acted like this. Here we had 2 days in which each day was a $100 plus move, and that took us to the 0.38 level at $12.88. And then the second occurrence was right in here where it moved 1 day and then began a cascading effect as this market drifted lower for the next week. However, we saw the market build a base and then move substantially higher from that price point, actually taking out the former high and trading to a new all-time record high in this precious metal before beginning to sell off and then dropping like a rock today. This has been Gary Wagner, wishing you, as always, good trading. I am sorry that I was unable to deliver that to you today. We will talk to you tomorrow for the next daily update and review. Bye-bye.